Austin the Money here. We're going to go over a weekly recap and why I am cash ready going into next week. Okay, so this week we are up 23.44. All right, so my most recent close was the spreads that I did for Meta earnings. These cleared by far. It was a $125 profit. This is the put I bought and this is the put I sold. So we netted 125 out of that. This is my Meta covered call in the money assignment. We profited 24.77. This AMD spread was a complete accident. I made it for next week, and then I realized AMD had earnings for next week, and I did not want to go. I don't want to go against any semiconductor stock during earnings because, I mean, those things just absolutely moon after earnings, or they could tank. I mean, it's very iffy with the semiconductors. So I closed that immediately, unfortunately, for a $60 loss. I did not want to trade AMD's earnings. Amazon put, I was considering about just buying the shares at 220 and running the wheel strategy. But the way the market was, I was like, man, this might be day one of like a bigger dip. So I decided to take a small loss on it, 261. Just so I can be cash and, not be bag holding Amazon shares on the first day of a dip. So I decided to take a small loss. I knew I was already up really nicely on the week, so taking a small loss on Amazon was not, a huge deal for me. And then the SoFi put I closed on Tuesday for 63. So that's all of this week's trades. Big winner was my Meta in the money call option strategy. So we did very, very well there. All right, let's get out of that. Let's get into this insane bloodbath on Friday, right? We got the jobs report that came out. U.S. added only 73,000 jobs in July, which they were expecting estimate gain of 100,000. And on top of missing that, they revised May's and June's jobs by a very significant amount, a combined 258,000 jobs, okay? And to put that into perspective, if you come down here, this is May and June, okay? Originally, June was at 147,000 and May was at 125,000. Those came down to 19K and 14K. So, yeah, more than a combined 250,000. That's an insane revision. And I don't know what's going on exactly. I don't know if this is a true revision or I'm not sure what's going on. But anyways, that's the new data we got. And that's insane. And July came in better, but still way under expectations of over 100K. So when the job market is like this, and on top of that, unemployment is rising. So unemployment ticked up to 4.2, while the amount of jobs is lowering. That puts a lot of pressure on the Fed to lower interest rates, and I could easily see Jerome Powell and his group lowering interest rates in September, at least 0.25%. Depends on, obviously, we get new inflation data every month. That's going to play a key role into the interest rate cuts as well, but I could definitely see 0.25% happening now in September for sure. So that's pretty much why the markets had a nice bloodbath, because pretty much we just got 2 months of data that was a lie. The market's been rallying for 2 months on pretty much the wrong data that wasn't even true. So that kind of jeopardizes, can we even trust the people to put out the right data? So, I mean, I think Trump fired basically the head person in charge of that. So I'm not sure if that's going to make things better or worse or what, but VIX spiked up almost 22% Friday. All right. It stretched out of the Bollinger Band, which means it probably won't nasty spike on Monday, but it very well could stay elevated. We were trading down in the 14s in the VIX, and now we're in the 20s. We got up to almost 22 at one point. So VIX up means this is where I like to start deploying money, right? I told you guys if that VIX gets over 30, I'm going into the market pretty heavily. If it ever gets over 50 or 60 again, I'm all in. All right, if that VIX ever breaks 50, I'm going all in, probably buying a lot of leaps. That's probably what I would do just to make it capital efficient. Get me a very nice short-term return. That would be my plan. But VIX is stretching outside the Bollinger Band, which makes me think that, okay, maybe this could be short-term pain. We definitely needed to see a little bit of pain because everything was just overbought, overextended. But the way it's stretching out, obviously you can see the Bollinger Band start to tick up. I mean, this tick could keep coming up if the VIX stays elevated. Just depends how it goes. But let's look at the Nasdaq. Nasdaq right in the top of that Bollinger Band. Boom, broke down, almost hit the bottom of the Bollinger Band. And if you look at the RSI, it went from overbought 72 all the way down to 48 in 2 days? That is a lot of selling pressure, okay? You can even see the volume spike, right? We were going down, and then boom, lots of selling pressure. And these are not good looking candlesticks either. This is a very strong selling pressure. So a lot of people are paying attention to that jobs report. Big money was hedge funds. But we're seeing a nice dip in the market, right? Amazon beat earnings, and Amazon right now is trading slightly under the Bollinger Band. So this would be a good selling puts for me, right? If I'm looking at stocks to sell options on, I'm loving this, bro. I am loving when it's breaking the bottom of the Bollinger Band, right? Because odds are it's going to trade maybe sideways to let the Bollinger Band catch back up, or it's going to rebound. I'm not sure if it's going to rebound or not. I'm not trying to predict the market. I'm just going off of data that we get, right? When you see this, the risk reward is very good, right? It has more than likely it's going to go back into the Bollinger Band. Hopefully can get to this white line. But it's not more than likely going to dump Monday way down here when the Bollinger Band is way up here. I mean, it could for like 1 to 2 days, maybe. As you can see, it comes out of the Bollinger Bands occasionally. Only like 1 to 2 days, maybe a third day max. And then it comes right back in the Bollinger Bands. So the risk to reward on Amazon right now is really good. Down 8.2% in a single day. So this is definitely a stock that on Monday morning, when I get all my capital back, which I am fully 100% cash right now, up 12.2% year to date, while the SPY is at I think a little under 6% right now. So we're doubling the SPY return right now. And another great thing is I missed this whole downturn. My portfolio was flat on Friday because I had already pretty much gotten all the gains throughout the week. But yeah, I missed this entire drawback of the market. I think the SPY, NASDAQ fell almost 2%. My portfolio fell 0, which is awesome. Another reason why I love in the money calls. So Amazon's looking pretty good for me, I would say. Google, we're still sitting, above the white line. Not the best for me. RSI is still kind of high as well. What was Amazon's RSI? I wasn't paying attention. Amazon's RSI has fallen to 39. So Amazon is definitely looking very juicy, in my opinion, for selling some options or some, put credit spreads or something like that. SoFi took a nasty hit, down 6%. SoFi broke out the Bollinger Band, came right back down. Broke out of it, came right back down. And now we've been bouncing off this white line. And it went below and then got bought up really quickly. So SoFi seems to be liking this white line as a nice support. Right in the middle of the Bollinger Band, so, kind of iffy. It kind of just is going to swing with the market. But that's not something I would be looking into. Let's check out Hood. Hood, all the way down to the bottom of Bollinger Band, bounced, got bought right back up. So Hood is very mixed signals right now. You can see it got up high, then it got sold off, got bought back up down here. So Hood's kind of like in that $100 level right now. It's been trading around $100 since July 1st, so a whole month. You pretty much seen no returns from Hood in a month. So that's that. Meta, this is my baby. I love Meta. Now look at this. Meta went out of the Bollinger Bands. And guess what? Meta has came right back down into the Bollinger Bands, okay? This is why I love Bollinger Bands. I mean, you don't need to overthink it with all these support lines and all these trend lines and all that. Simple Bollinger Bands and RSI. I mean, you use these two indicators and you trade weekly options, you'll be a great trader, right? Or you just buy dips and sell, buy the lows, sell the highs. Simple as that. This is no day trading, scalping. This is none of that. I just trade weekly options. I spend like 5 to 10 minutes on my phone punching them in, and I'm good for the week. All right. Well, now the Bollinger Bands still at the top of the Bollinger Bands. So not a big fan of Meta right now. Still, I think Amazon would be my favorite. Let's see Apple. I think Apple's been getting beat up. Whoa. Apple's been getting crushed. So Apple, wow, big nasty red candle, lots of selling pressure, and we've broken below the bottom Bollinger Band. So this is another stock that I would be interested in selling some puts on. All right, the risk reward is looking more so in my favor. All right, so yeah, so Apple's looking good. RSA is at 35. We're almost getting to oversold levels on Apple. Apple and Amazon are really looking nice. Really liking those two. And I don't know if you guys are into Chipotle or not, but Chipotle's been getting hammered, boy. Oof. I love Chipotle, but yeah, I don't know, man. They've been really skimpy on the bowls lately, and I think a lot of customers are just choosing not to eat there because basically the portion sizes have been getting smaller and the prices have been going up. I'm not a huge fan of trading like retail or restaurant businesses, basically like that. I like tech businesses or pretty much the Mag 7. You really can't go wrong trading the Mag 7. I mean, that's pretty much as safe as you could possibly trade, right? I would say SoFi and Hood would be like, and Oscar Health, probably my riskiest positions that I would get into, but I like to stick to the basics, man. It makes me consistent money. This is 13 weeks straight of making 1% gains or more every single week. And obviously it's going to get a little tricky now because, market's been going up for 13 weeks, right? So it's been very easy to make money. But now the market's going down. So now I'm going to have to be very careful on picking which stocks that I want to trade and hopefully can make that. I think I need to make at least 1,000 to 1,100 a week to come on profit. I made this spreadsheet that helps me keep track of that. I started it on the week of June 27th, and this I've got it set at 1%. I've beaten. So this is basically what I need to make 1%, right? Portfolio start balance, what I need to make 1%. And then I try to contribute about 500 per week into this portfolio as well. And then the end balance for the week. And then we start week 2, what I should make. And I highlighted green if I've met the goal. And then I'll highlight it yellow if I missed. And then I'll highlight red if I lose money that week. Which I hope I never see a red on here. But this is an awesome one. I want to change this to 0.75% though. I want to be a little more conservative. So as you can see, all the numbers change. And so for this week, I need to hopefully bring in 1036 and I will meet my 0.75% for the week goal. And that is about a 3% return in a month. And that represents about 40% annualized. 40% in a year, I am more than happy with. So that is why I shoot for this goal of at least 0.75 0.75%. I like to make 1%, but 0.75 is like my minimum. But yeah, this is the spreadsheet where I'm tracking each weekly goal, each weekly money that I make. Punch it in here, and then this is the Friday of the option. So this is like the end of the week. So my 8/8 options will go here next week. My days printing, and then this is where I put all my trades. Yeah, I wrote oops. That was a big oopsie there. But yeah, guys, that's the market. We do have some earnings coming up next week, which my Oscar Health is having earnings on Wednesday, which means, premiums are elevated, and we love selling options on some elevated premiums. So Oscar Health is a very possible option as well. Let me check out Oscar Health here. Oscar Health is also trading very close to the bottom Bollinger Band, which I do like. But, like I said, earnings are a little bit risky. And honestly, I don't know if I feel comfortable holding Oscar Health. I'd much rather be holding Amazon or Apple. Preferably Amazon is my favorite out of all three. But we have Celsius, Lilly, Datadog, Crocs. We do have some decent sized companies reporting earnings soon. Let's see, AMD's next week, App, Elf, is this O Realty? Yeah, O Realty reports. Palantir is on Monday. Oof, and HIMS. These are some very overpriced stocks right here reporting. So pretty much, if they're not reporting some perfect earnings, they're going to get crushed. That's just how it goes when you're priced for perfection. If you report something slightly under perfection, or even guide slightly under perfection, you're going to get crushed. These stocks have been doing very well. Very, very well. So I definitely wouldn't be surprised if someone takes a hit after earnings. That's just how it goes, how the game's played. But honestly, I'm thinking of Amazon for next week. I'll make a video probably Monday or Tuesday showing you guys what trades I'm in. But I'm really liking this Amazon setup. RSI's at 39. Just had an over 8% sell-off day. So I would probably want to sell some, maybe like some 205s, just to be extra safe way down here. Something like that. But I'm about to go eat, guys. So I'm going to catch you guys in the middle of the week. Peace.